welcome to the Futures Edge. I am Jim Iuorio. That's Bob Iaccino. That is Chief Market Strategist for Path Trading Partners and our good friend at unfilteredinvestor.com, Mike Arnold. Before we get started, I want to thank, first of all, our sponsors, Marco at Independence Arc Farms. We always complain about big conglomerates taking over the food supply. There's something we can do. That's to patronize small independent operators like Marco, grass-fed, grass-finished beef. Dana Samuelson, American Gold Exchange. Go own. It's time to own physical gold and silver. You know, Bobby and I have been saying that for a long time. The next move up in gold and silver might not be as orderly as the one that preceded this. It might be best to own gold and silver. And the most important sponsor, unfilteredinvestor.com, where Mike Arnold, Bobby Iaccino do the technicals for not just trading, but for medium-term swing trades and portfolio construction. Bobby, it's Tuesday afternoon at 2:00. Why do you have a bourbon drink in your hand?
So I just explained it is a brown butter washed bourbon, old fashioned with a dehydrated orange slice and a macerated cherries. My wife, when she tries out a drink and she says, "Do you want to taste this?" I mean, what the F am I supposed to say? What
No,
would you say?
you're supposed to. And your wife tends spar sometimes, right?
Yeah. She's I'm trying to convince her now to do a YouTube channel, but like one of those where you don't show the face. You just kind of show the hands and there's a narrator saying what she's doing.
I like
Because
it.
what she does is not like she doesn't do things where she doesn't slap the basil on the counter and twist it above the drink or she's like a mixologist for regular people.
Does
You
she
know,
do
she
any
just
old
does
fashions where she doesn't use a blowtorch and smoke anything or anything
no.
like
I
that?
mean,
for old
these
fashion?
she did in the oven. She did these orange slices in the
Okay.
oven. She also made she made an orange peel powder that she's gonna put on top of the drink another time. But like she does this stuff in a home oven, with she does a couple of things that you'd have to get used to, buy a shaker, stuff like that. But yeah, anybody could do the drinks she does. She's just really good at it.
That's awesome. Mike Arnold, I was told you were a little bit cranky today. Is there anything I can do to make you more smiley or no?
You
There's
just
that,
did
you
it.
just did it. Yeah, well,
I
if I had, probably if I had Bobby's drink, I'd be more smiley.
what has been the root of your
Or ice
crankiness today?
I mean, I got iced tea here, that's why I'm cranky.
That could easily be why, right? Okay, let's jump right into it because I think a lot of people do want to talk about markets. You have S&P up, I assume?
I do?
Okay. In what form? Futures. Okay, good.
I
So tell
in
us
the
what you
fu
have up and what do you see?
we're having more and more trouble breaking higher. The rally broadened out, but been getting price rejection. This is a weekly chart. Let me jump to the daily chart. The daily chart keeps flirting with the 50 EMA and is really running out of momentum. Talked about this a lot on the live streams, how any upside move now is getting met with constant selling pressure. We're literally holding at the high area from the end of October, beginning of November, and it's looking more and more like the market's just tired and ready to break down. We don't trade off of that though, but we've got divergences, we've got waning momentum. We're dipping on the S&P. We'll look at the Nasdaq next. We're dipping closer and closer to the bottom of the rotation zone. We still technically on the weekly basis, it's been invalidated on the daily basis, but on the weekly basis, we still technically have a double top pattern on a weekly close below 66,814.50.
Hold on. 60. Say that number again, please.
6,814 and 50 cents.
Okay. So that's a settlement below that, and you think it's forget about it?
Well, it's more that we could easily test some of the low area from October and middle of November.
Okay.
We could
Which is
easily break down. Now, the weekly rotation zone is still technically in the way, which slightly lowers the probabilities. However, I'm going to be watching if we do get down close to that level for a potential bounce. But if we just have a weak bounce and roll over again, it could be at least a short to more medium term top. We could even get like a series, maybe 4 weeks of pullback if that were to happen. It's
is
not
not
triggered
the
yet.
most unusual thing in the world, people. It always feels like it's never going to happen again until it does, right?
Well, I mean, but look at this. Look at this. I mean, the last correction, besides a couple down weeks, we had 4 weeks down from the end of October to mid-November. and people were freaking out then. So if we look at stuff on a much longer, look at this. Here's the monthly. We've been touching on the. Why have we been touching on the monthlies more and more? Because so many things are so overextended, not just metals, which we talked about, which I know we're going to talk about again, but even on the monthly basis, we have not reconnected technically since we broke above the top of the rotation zone in June. We haven't technically reconnected with the rotation zone.
You don't call that one 4 months ago. You don't call that a reconnection because it technically doesn't, right?
It technically didn't.
Right. Okay. That's
So yeah,
interesting.
can we go a while? But even the last rally from November in 23, we went for a while, but at least we dipped into the rotation zone a couple times before the bigger pullback in April last year. So we haven't even reconnected with it. That's why I'm just saying, does that mean we have to plunge? No. But even a move, let's just see where that would be. Even a move to 6,600, where would 6,600 be on the monthly chart? It would pierce through into the very top edge of the monthly rotation zone. Would it be shocking? No, it would just be somewhat of a normal correction, which we haven't had in a while.
No, that makes sense. So tell me this. I know I asked this question. I don't remember what your answer is. When you look at that chart, the monthly bars, and you see a number of them that haven't, like the last 3 haven't even come close to the rotation zone, and we haven't touched the rotation zone since June, as you said. Is there a magic number of bars where we don't touch the rotation zone, where all of a sudden it gets scary, like there's a drop coming?
No, it's not the number of bars, it's how extended it is.
So this is pretty extended on the monthly basis, right?
It's pretty extended. I mean, it was not as extended as metals. We could theoretically not trigger any of these topping patterns and keep just moving sideways without a correction and let the rotation zone catch up, which would reconnect it with the rotation zone. That still is an option. That's why I have to wait for a pattern to trigger. I just can't go, hey, let's just go short, because we could go short and go maybe 3 or 4 months of sideways price action and reconnect it with the rotation zone. That's the other way to correct it,
Bobby.
So that's what I'm talking about. But I am watching this. If we do start breaking down on the weekly basis and we trigger some of these patterns, we could easily see a dip to 6,600. Go ahead, Bob.
Mike, let me ask you on the monthly chart, and you go back to January, February, March, April of 2025. That was 20+% drop, right? Somewhere in that range from the high close. It was about a 20, I think it was 20.3, somewhere around there from the high close. Is there a net? Well, what do you got there?
It was 21.5% roughly
from the high, right? Okay.
from the high.
When you see that kind of a move, we all think of 20% as, the start of a new bear market. When you see that kind of a move on a monthly chart and then it reverses in the next 2 or 3 months, does that to you mean the continued run is likely to be stronger, or you don't put any weight in that at all? Because there's other times, if you go back, I'll say 4 or 5 months where the wick went into the rotation zone, but then ended up closing back. Is there anything in that particular? Because what I'm trying to get at is a lot of times people go, okay, 20% time to buy. And that isn't necessarily always the case, although lately it seemed to be the case a lot.
What I do, and I'll tell everybody exactly what I do. I try to look. We've gone through the percent B buy pattern before. I know we've covered on here.
Yeah.
For anybody who wants to know, here's the settings. Here's the exact settings. And this is on the monthly chart. It's the same on daily, weekly, and monthly, but it's the length of 5, high, low, close divided by 3, standard deviation 1. You look for the bar to drop below 0. And then that becomes the setup bar. If it breaks above the high, it's a buy pattern. It's got to follow through on a monthly basis with the close above here. You see the last dip in April, we dipped below here, right down here, this bar down here that I'm trying to highlight. That was a setup bar. We broke above it with the buy setup in May, and then it followed through with the close, and then it keeps going. Do I know how long it's going to run? No, we can do harmonic projections and everything, but that's just for literally raising stops, because this is the kind of move you want to trail out in Here we dipped in October 23. Monthly setup, percent B buy bar. Rotation back up, took it out in November, closed above it, and then we ran until the next 20% correction. So
Happened again in September and October of 2022.
September and October of 2022, we had setup bars, but let's see here. Did this one did trigger right here.
Yep.
October 22, we were below zero. And then the next bar, November of 22, broke above it and followed through with a close. Did it immediately take off? The stop, by the way, is below the setup bar's low. So that's the technical stop that can be raised. But did we ever get close to that bar's low? No, we traveled sideways for a few months, but then broke up, had another pullback, triggered another buy setup, broke up, and then triggered another buy setup and broke up. Is it guaranteed to work every time? No, but it's a very reliable pattern.
And this is something for people who are members of the Unfiltered Investor. You'll see we look at weekly percentage Bs since we do the newsletter. We release the newsletter on Sunday mornings, and we'll specifically say on the trade, this is a percentage B buy. So for those of you that are members, that's what that is. Like if you go to a weekly chart on the ES, we don't have one right now in terms of percentage B, but we theoretically could. I mean, we had one 2 weeks ago, but it didn't close above. And you notice that a sideways movement since then. As a matter of fact, we have a very weak week starting. Is that right, Mike? 2 weeks ago, we had one, but it didn't close above, so it wasn't a signal.
Correct. This broke above and it did not close above. So it technically, that does not mean you can't get long, but if it doesn't follow through with the close, I don't stay long. Why? Because the probabilities aren't there. So here we had the weekly dip below it. We broke above it for a few days, and then generally I at least move up stops if we get to a key resistance, which we retested the highs from the week of the 12th of January. So at least move up stops or at least get it to break even. So if it doesn't close back below, you're out, or you maybe you take something off and then you scratch out for the remainder, because I don't want to carry it if it's not a high probability. And we didn't trigger it. And so far, you can see on the rallies, we haven't followed through.
And
The
Jimmy,
last
when we
one
start
that we
doing
triggered-
options plays on the newsletter, which we don't do yet, this may be, in my view, Mike can chime in when the time comes. This may be a good basis for options trades, longer term options trades. But
I love it.
Yeah.
And I love, again, you guys know, and you guys know who are watching, that I love options. I like to represent most positions that I can using options. So yeah, I'd love when that happens.
so real quick,
Can I get
remind
one more
me, guys.
example, Bob? Here
What's
was
that?
one. The middle of November, here was 1% B buy setup, followed through literally the week of Thanksgiving with this one did close above it. At least you're going to move up the stops but near prior major resistance, which were moved up, and then you can keep trailing. And now you'd still technically be in it, but I'd keep a very tight trailing stop, because it's starting to look like it's going to roll over. Does that mean I
Okay.
just sell? No. But
Yeah.
I want to get stopped out of my longs through at least the remainder of my longs through trailing. I don't
So
just
here's
want to
my
say, hey,
question
it
then,
looks
Mike.
toppy, I'm going to take it off. Now,
So
if we
remind me
do
to talk
trigger-
about percentage B when we hit gold. But for example, in a situation like that, for people who do trade options right now, would you think it was a terrible idea when you see a percentage B buy to sell puts or sell a put spread?
No, you can. It depends. Again, you're.
Depends on vol and everything else.
I look at volatility. Now, a lot of times, if you've had like the last major, when you had this, okay, especially if you start to see something rally back and volatility is still stubbornly a bit high, and you think, because you can see well before that, hey, we're probably going to set up a percent B buy bar, you can look to positions of if volatility is high. I love selling options. I love selling them
By
because
the way, for some of our new listeners, will you explain exactly what a percent B buy is again?
a percent B buy, you're gonna most charting platforms have it. It's based off Bollinger Bands. It is a percent B. It's a indicator, technical indicator. You can look it up on there. We're using TradingView. If you can download a free version of TradingView and even play with it there. It's when things get stretched on a volatility basis, on a standard deviation basis. So that's what you're looking for. Length of 5 again, high, low, close divided by 3. So it does not default that way. You have to modify it. And you have a 1 standard deviation. You look, let me expand this. This is the bars I'm talking about down here. You look for it to drop below 0. That's the setup bar. So here would be the setup bar. This would have been a setup bar. This red one at the 3rd of March, the beginning of March.
Yep.
It kept going. You see the next bar did not move above the high and close above it. And then we had another setup bar that we had the following bar move back above the high of that bar and follow through with a close.
Okay, so that's a %B buy right there.
Yep.
Actually, that makes sense to me. Okay, good. Yeah. Bobby?
So I am currently long small caps. All right. Now,
I
one of
traded
the
small
ways,
caps today from the long side as well. I'm flat
yeah,
now,
now
but I
one of the
made money
ways that
today.
I've gotten into it is IWM, and then the other way is SPSM, which is S&P 600 small caps, right?
Yep.
So let's just look at the Russell, Mike, and tell me what you see there in terms of the risk to the downside, or just the
Well, we
whole
triggered
analysis.
Head and Shoulders
Yeah.
last week of January. So at least, and we've already pulled back to the first and second target last week. So we still have a potential final target unless we close back above. If we close above 2684.2, the final target is off the table. So I pretty much, once that triggered, I was not interested in the short term for the either the IWM or the Russell 2000 futures. Let me also show something else. We were just talking about %B buy on a daily basis. We did have a potential setup for today. It broke above it briefly, but it's not going to close above it. So it's not going to be a triggered event. It would be a failed triggered event. And it failed against the upward sloping neckline from the Head and Shoulders. So this, unless something triggers to get me long, or unless we invalidate the final target on the Head and Shoulders, I'm not interested until I get a long signal. On a weekly basis, we don't have it yet. We don't even have a potential signal yet. I will be watching for one, especially if we break lower, possibly setting up for next week, but we don't have one yet.
Interesting. Okay, so hold on. So when you say, just looking at these charts, that provided it can settle above 2684.2, the Russell's a better spot to be just because it's had somewhat of a correction these last couple of weeks where the others have traded relatively sideways, or no?
Yes, I still like the Russell once it's played out this corrective pattern.
Okay.
Not going to front run it though. Not going to front run it. We still, if you look at the Qs, we highlight this. I don't remember, a couple weeks ago in the newsletter or some point. Here's what I'm telling you. Also, here's the QQQ divided by IWM ratio trade. So you can see. Look how far it's gone.
Yeah.
All right. Now let's go to the monthly, since we love talking about monthlies. Let's take a look at this. Here was the high from the .com. So the ratio was up around 1.91 at some point. The ratio went all the way down to below 0.5. Now, and look at the prior top in 20, we topped out about 1.91. We finally broke through it in July of 23 and retested. This was when it was like, okay, everything's tech, everything's AI, that's going to the moon. Forget about the small caps. Since then, we kept going up to an insane ratio of 2.6.
And by the way, people who are watching, if you lost the thread here, this whole up move is meaning the Nasdaq is outperforming the Russell by a crap ton. So it could be reversing is the point. Sorry, I didn't mean to interrupt. I just want to make sure they have the thread.
Absolutely correct.
Yeah. So that's my big, again, in that speech I gave in Arizona last week, if I had to pick 2 trades for 2026, it was Russell over Nasdaq and at some point Crude, but it's not given me the opening yet. But those are what I'm looking at. I already have put on some of the long Russell against some of the other indexes as well. So, Bobby, what do you got?
Yeah, go ahead, Bob.
Well, I mean, do you think we need to cover Nasdaq separately? I mean, to
I
me,
do want to
Nasdaq
cover
just
Nasdaq
looks.
separately.
What's that?
I do want to cover Nasdaq
Yeah,
separately.
because to me, the Nasdaq just looks ugly. I don't know. It just doesn't look.
It's very
Go
ugly.
ahead.
I just want to point out on this ratio also, last month we triggered a double top pattern. We've had a little bounce back and we've retested the breakdown zone, but and this is a minor double top but could be starting a catalyst. Also remember, we could start, it doesn't mean the Russell has to go up and the Nasdaq has to go down. That's not what we're saying. Let's say we get a bigger correction. This could mean the Nasdaq drops a lot faster and a lot farther than the Russell does. That's another way for this ratio to come back down. Both things can go down. It's just the Nasdaq could way underperform the Russell. And
Give me way.
it has a long way to
Yeah.
go to even get to that breakout level.
Long way to go. Yeah.
Well, highs even from .com. Well, so look how far off with those we are. And that would just be a start to it. So this is a long-term theme in my investing portfolio for the next while. We will get bounces. It's not going to go in a straight line, but it's something to keep in mind moving forward.
And that's funny to me because that's why I bought Russell and why I bought the S&P 600 small cap. It's because of this, not because of this ratio in particular, but because I do believe that small caps are going to outperform one way or the other. They're either going to get hit less or they're going to play a lot of a catch-up rally, similar to what silver did, but not in the same sort of format.
Right.
Not with the same sort of verve, which, by the way, there is another ratio chart I want you to look at before we're done here today, Mike. I think you might know what that is. But let's go to the Nasdaq specifically. What are you looking at?
Nasdaq. Nasdaq does. Remember the S&P? Let me jump back there real quick. You see how it's still off the bottom of the rotation zone? This is the weekly in the S&P. The Nasdaq has been flirting with the bottom more and more. We do have a lopsided technical double top also there. The breakdown, Jim, for that one would be a weekly close below 23,904, and that would trigger a much bigger potential correction. The level I'm watching ahead of that, we keep bouncing off this 50% harmonic area right near that area. But if we close below 24,821, then we will be below the weekly rotation zone. Will have triggered a short-term probability flip that we could easily retest the lows from November. If we retest that low area, not necessarily the low area from November, that could possibly lead to a trigger of the larger double top pattern. But the Nasdaq has been a lot weaker, where the S&P has gone to new highs. The Nasdaq really, and here's just the March contract. You can see on the March contract, not the continuous contract, it's stalled out well short of the highs. So the Nasdaq's been distinctly underperforming, and a lot of things have broken down in the Nasdaq. Have you guys been looking at technology software?
Yeah.
I mean, again, people made fun of me on the Microsoft double top, and that played out fully. You have things like Adobe, CRM. Look at those charts. They are now, we're going to get bounces in those. At some point, there's going to be wonderful plays in them. I'm going to start watching for some bottoming plays in them. But these things have been hammered. Like here's Microsoft. We had the massive double top pattern, which triggered back in the middle of November, retested the breakdown zone, went sideways for a bit, and then boom. Look at this. Now we're testing the critical 62.5 level.
Wow. So back to the Nasdaq real quick, because I have a question that's kind of counter to what you're saying. Because you look at that chart, is there any possible way you can say, okay, it is traded sideways, which is we all know a correction can happen with price over time. And then you throw in days like last Thursday when the metals market, Thursday and Friday, when the metals market just got hammered. And I thought that the chaos that was causing would be a punch to the nards of the equity indexes, and it wasn't, and they handled it relatively well. So what I'm saying is this, is that can you twist and look at that and say, okay, if it settles above X level, I'll think actually this has been a pretty impressive run, how it stayed in. Is there any level that would make you more bullish?
Yeah, we may end up for night. It's only Tuesday. We may end up next or by the end of this week setting up a percent B buy bar. So if it broke above this week's high, right now it's a potential one. We're gonna have to fast forward till Friday. But if that set it up for a potential percent B buy bar, then next week broke above it, which would be a breaking above this 26,027 area. I would be at least short-term bullish, watching to see if we followed through with the close. Last time we had one a couple weeks ago. We broke above it, retested the high area, and then collapsed back down, not officially triggering the percent B buy. So yes, I'm just not saying be bearish. Again, we haven't triggered a bearish setup yet. That's why I'm watching that 24,821 level. I'll also still look for buy setups. It's just on any buy setups, they're not following through right now. So I have to be more aggressive, raising at least my stops and my break-even level in case they do not follow through.
Okay. Do you want to switch to silver?
Yeah.
So I had a new rule that I instituted today. When silver was up 15%, I bought some put spreads. I think when any asset that I'm holding is up 15%, I buy some put spreads. That seems fair, right?
Nothing wrong with that.
But I got to jump to the monthly chart. With this pullback even, look at the monthly rotation zone.
Yeah, crazy. Yeah.
We're not even reconnected with it. And we had a 30% drop. That's how insane silver got.
Yeah.
So is this we talked about this.
Yeah.
We talked about how we don't know when it's going to end, but when it ends,
it's going to end quick. Yeah.
It ends quickly. Now, what am I looking for? On this, I was watching today whether we triggered a percent B buy, which doesn't look like it's going to happen. But let's say we get a buy set up and we don't take out Monday's lows. The key level we have to get to trigger the probabilities back up is a close above. Just remember, it's 102.81. Just remember 103.
Right.
A close above 103 tips the probabilities higher again. Any rally into about 96.50 to 103 is in the major rollover zone if it can even get that high again. So that's what I'm watching on any follow through buy setups between 96.50 and 102.81. I'm watching for potential topping plays or rollover plays. If it closes above 102.81, then I could continue to hold any longs. If we don't even bounce that high and we start taking out this 75 area again, I don't want to be long at all, because the secondary reaction would have failed and we could then easily reconnect with the monthly rotation zone and potentially even take it back to, the mid $60 area.
Yikes. But again, as you guys know, people are watching too, and I was very vocal about it. Even when the charts looked good starting 2 weeks ago, I sold about 30% of my silver position. Just when things get stupid, you can look at charts all you want, and if all of a sudden you're like, oh my God, this thing is going parabolic, I don't know. Seems like it's wise to take some money off the table, which I did.
Well, and look, it was overextended. It didn't reconnect with the weekly rotation zone for 1, 2, 3, 4, 5, 6, 7, 8 weeks, and then it did it really quickly.
But let me tell you this. So it reconnected with it. Then the next one went into it and rejected it. If this week closes pretty good and then we get a little bit more strength, I don't know, doesn't that seem like something that you like? I thought.
Not I can play a short-term bounce. Again, I'll play the first secondary reaction on these. So I was watching to see if we triggered the percent B buy today. Doesn't look like it's going to trigger. But I will, between that 96.50 and 102.80, I'll watch for topping patterns on that bounce.
Okay.
If we close above 102.81, I will then just start trailing a stop and possibly retesting the high areas.
Makes sense.
I love the secondary bounces. But a lot of them, when you have these vertical up, vertical down moves, a lot of them stall out before they close above the 62.5. If that happens, I do not want to be long the asset because you can easily have another rollover play. And what that next rollover play does is everybody who bought the dip then is now trapped again. So they got hurt. A lot of the latecomers got hurt on the first downdraft because anybody who literally bought since the end of December was at nearly a loss or very close to a loss last week.
One more
Now,
question about this is that when you look at the 8 and the 21 and how sharply they have turned on the daily, is that something that sets off alarm bells just based on the slope change?
yeah, just
Oh,
based
yeah.
on the size of this candle, which
That's
is
what I
what
mean. I
triggered
guess
the
we're
slope
saying the
change.
same thing, the size of the candle and the slope change, right?
I mean, we go to the weekly bar. That is an outside key reversal week if there ever was one.
Yeah. Okay.
And
I
That
think
want
if
makes
to
this
sense.
throw I
was
want to throw
reconnected to the
something.
monthly rotation zone closer to $60, we were trading above 120. You
Yeah.
could literally see in the matter of a month or two, even a month, you could see this cut in half from its high price, and that will freak out a lot of people.
So I want to throw
So
something at you guys about silver specifically. Friend of mine who watches commitment of traders reports very closely and looks at a cumulative Z score for basically every futures market and some individual stocks as well. He told me this morning that silver was not stretched based on longs when the sell off started, and that the Z score was not out of line in terms of the switch in commitment of traders, in terms of like outsized longs and this and that. And I said to him, "So, what is your conclusion that this sell off?" He goes, "This is the part I didn't like. My conclusion was that the sell off wasn't, it was a little bit manipulated. It wasn't actually stretched longs that were selling out." So what's your guys' first response to that? Because I tweeted last week when gold crossed 5,000, and we can switch to gold if you want, Mike. But when I tweeted last week when gold crossed 5,000 that it might actually be time to start selling some gold. Now, I didn't. I didn't, not because I didn't think it was time to sell gold. I was talking to our friend Dana Samuelson, and we were going through the process of what it would take to actually get him some physical gold. And it's a super easy process, right? But because we have so much gold, it was a family decision, and my wife and I didn't get time to sit down and discuss it. Now, I'm not sitting here saying, well, I should have done it on that day, blah, blah, blah. Given the fundamental backdrop, not the technical, but the fundamental backdrop, I'm just not sure if I see a reason to sell any of it. So I want you
Silver
guys to
or
both
gold, right?
comment on all of that.
Yeah. Yeah,
Go ahead,
I
Mike.
there was a lot of rumors going on that somebody was liquidating a metric crap ton of silver on beginning last Friday. So I don't know what the real answer is. It certainly traded like holy shit. But again, a holy shit trade can also just be based on the fact of how much it ran so quickly and so many
Which is
people who
what you
bought it
wrote in the
late.
newsletter. I want to point out to people that was something Jimmy wrote in his opening piece on our newsletter this past week.
Appreciate that. Yes, and I think that was again, that's one of the reasons I got out of, not enough of my silver. I still took it in the chin. Oh, I should have. It's an opportunity to say nards. I still took it in the nards like everybody else, but I did take some profit on it. Yeah.
Mike, what do you think about what I said?
uh, again,
You can
I've
have no
seen
opinion. It's okay.
stuff on both sides. That's why at the end of the day, I'll trade the patterns and the technicals.
Fair enough.
That's what I have to do because I've gone through, and it's not just metals. Whether it be stocks, metals, meme stocks. When things go vertical, there's always people on both sides. They'll justify the pullback. They'll say it's not over. It could be over. It might not be over. Like on gold, you want to shift to gold. Gold is going to trigger a percent beat buy bar today. We broke through the high earlier. It's going to follow through. So gold, something again, I'm interested in. At least my stop raise level is 5,025. It's got to follow through with a close above 5175. We close above 5175. The secondary reaction probabilities are that we retest the high area, especially 5325 and 54.76 possibly. So then it's trailing long. Does that mean that we're going to new highs? Not necessarily. Could we go to new highs? Yes. Does it mean panic out? No, but gold at least returned to its monthly rotation zone. Oh, sorry, that was the weekly. Gold returned to its month. No, it didn't yet. I'm sorry, I was corrected. Gold hasn't even returned to its monthly rotation zone, and it's been above the monthly rotation zone. I don't remember this one technically. It's been above the monthly rotation zone since March of 24. Gold is still very overcooked.
Yeah.
Does that mean it can't get more overcooked again? No, but on these run-ups, I have no problem from a technical perspective from liquidating some longs and waiting for at least some consolidation or pullbacks. You know, yeah, you have the dollar. People talk about the dollar debasement trade or whatever, but I still have to trade some of the long-term position on gold. I still have to trade around the core position.
Makes
So
sense.
let me ask you, Mike, are we getting a daily percentage B signal on gold right now?
Yeah, today.
Okay. What does that mean to you? Like, I know that
Again,
Jim, this is the first time Jim's getting it explained to him. And so I'm sure a lot of the viewers are. So maybe kind of go through what this would look like for you.
the initial stop is below yesterday's low. It's good.
A
I'm
long
going to
way
raise.
down.
Huh?
The long way down. Yeah.
It is a long way down, but it's going to be, I said it's going to be aggressively raised. Once it gets to 5,025, it's raising the stop. And I'll tell you exactly where I'll raise the stop if you want. Again, not trading advice. We can't give trading advice, but I could show you what I like to do.
But
I'm going
I'm
to rough
recommending you guys do this.
estimate that the
Kidding. It's a
stop will
joke.
be raised to about 46 on a closing basis, or about 45.75 on a trade through basis.
So you
That's what
need a trade tomorrow above today's high, and that will be a good signal.
no, it will,
No,
it's
the signal's
already a
today at the
good
close.
signal.
Oh, the signal's already today. Okay, got it. Yeah.
Yes. I will be raising the stop roughly. I might just do it on the close because we got to a high of 50.18 versus 50.25. I mean, that is close enough for me to at least raise a stop. So I'm not exposed that much of the downside. But if you look here, that stop level is based off the 62.5 of this run up. That would take us, if we close back below that, that would be the below the close on Monday. Would you want to hold it then if we erase this whole green bar and we close back below Monday's closing price? Not really. So at least I'm eliminating risks there. The next stop raise would be when we hit the area close to about 51.75. Why? Because between 5,025 and 51.75, we still have that's a major rollover zone where if this secondary reaction is going to fail, it's going to fail in that vicinity with a very high probability. If we do close above 51.75, the probability shift that we can retest the high areas being 53.25 and then 54.75 area.
Perfect. You want to do
If
crude?
Yeah, if we do break to new highs, since I'm only on once a month,
Yeah.
if we do break to new highs, and people want to know, the next harmonics are 58.42 and just slightly above 6,000.
Perfect.
Crude. All right. So we technically shifted the probabilities in crude last week. We broke above very key resistance and the 200 back on Tuesday.
On the daily, right?
Yes, on the daily. The
Yeah.
daily 200, which was resistance in the middle of January, it pulled back to the rising rotation zone. We rotated back up. I believe I wrote in the Unfiltered Investor. I was watching for a close initially above the 200, and then I was going to watch for a follow through and a close above 64.69. We closed above that. We then made a really beautiful, double top pattern. We get the correct targets, which triggered pretty much Sunday. It triggered on the 1 hour to 4 hour. You can see here's the 1 hour, pulled back all the way to the final target, which was not a shorting opportunity. I believe I wrote in the Unfiltered Investor too that this was to look for pullback longs because we have the rising daily rotation zone. So it came to all the targets, came down to the bottom rotation zone, and we've rotated back up. So was watching for buying opportunities in this. We broke above a very small resistance shelf on the 4 hour, and now we're back off to the races. I need this to close back below 64.50 to trigger the probabilities. So this is in trailing mode again. We close above 64.50. I'm going to be watching for 65.14 and then
By the way, I know you guys, he said below 64.50 a second ago, and then he said above 64.50. He means above 64.50. Just want to make sure you guys understand.
Above 64.50. Thank you,
right.
Jim.
Yeah, sure. No, I like it. Okay,
there,
good.
65.14, 65.81 are the next two targets, but those are targets for at least raising a stop, because we could easily see crude hitting 66.75 at a minimum, possibly 68.45, and then that we could be getting into a new higher plateau level. So
Did you guys watch Landman?
Yeah.
I loved Landman. Do you put that as one of your favorite shows of the last couple of years? Is it that good or no?
Absolutely.
The scene with the daughter where she's talking to the woman about her roommate, and she goes, "But like, why do I have to call her they?" Because they is plural, and she's like,
only
"Well,
one of
who's
her."
to say that's not correct?" She says, "Well, the English language." I loved that scene.
Great shit.
It's again, I literally think it's my favorite TV series from the past, like in the last couple of years.
The last couple of years, I agree that it's up there with mine too. And then I went to Lioness, which is Taylor Sheridan's other one, the one with Zoe Saldana. There's nothing funny about it. It's just all dramatic and awful and bad. It's dark. So and again, dark is fine for some times, but the thing about Landman is that every time it was getting dark, there'd be the funniest shit would happen right then. That's what made it beautiful. But
Billy Bob Thornton is playing the character that he's played in like the last 5 or 6 movies he's been in, and he's just so good at it.
And crushing it. Exactly. Like Goliath. I don't know if you saw that show.
Goliath,
He was great.
He was basically the same character in Bad Santa, except it was a comedy.
Yeah, right.
And this is
anyway,
comedy
the only reason I brought up
serious
Landman is because he says, again, what, 68.70 is the sweet spot for the U.S. macroeconomic condition where crude is, meaning that our producers are making money and it's not biting into the consumers too much. So this rally is probably good for America. Correct, Bob?
Yeah, no, I agree with that. I mean, overall, this is a thing that's been sort of under discuss. We've talked about it, but like I've never understood this whole thing where Trump wants lower prices, except certain economies of states that really like Trump do really well when crude oil price reaches that low 60s, high 70s mark. The range
hopefully
of
knowing
low
Trump,
60s
he's
to
just
high
paying
70s.
lip service to lower prices, but really wants it to be at the optimal level.
Yeah, he is. He is.
Yeah, and here's your weekly chart. Look how often it hangs out at the let's say the upper 60s, low 70s. Look how often it hangs out there. I mean, would it be unexpected for us to go back in that area and gravitate to the key 68.45 magnet price? No, it wouldn't.
No.
And it wouldn't be out of whack. We spiked above it, we've spiked below it, but that's a really nice equilibrium over the past couple years.
We've hit everything I want to hit. If you guys want to go to individual names, whatever you want.
There's 2 wild cards I want to throw at Mike. Number 1 is the gold silver ratio. Do you have a chart of that, Mike? If you don't, I can, there you go. So when you look at something like this, I think, Mike, you and I both know that pretty much everything can be charted except maybe the VIX, right? Except something that just has pure mean reversion qualities. But I've been looking at this chart a lot because basically the gold silver ratio went down to 42, which was kind of the average of the gold silver ratio, like from 1900 to 2000, sometime in that 100 years. And then we moved up to an average gold silver ratio of about 60, high 50s, low 60s. Well, we went back to 42 and then we rallied up, but the chart to me still says that's likely to push lower. So what are you seeing here?
I mean, I only have this back to 2000. I wish I had it longer on here.
I can give you a way to do it longer, Mike.
What is that?
I prepped the symbol in an email. So let me just shoot you, but tell me what you got now and I'll just shoot you that email real quick. I had it all set in case you didn't have it.
I can do it. Hold on.
I just sent it to you, the exact symbol in here that will give you the longer one.
There we go. I just did it off the futures.
Okay, fair.
I mean, right now, yeah, we've been to a low of in the 20 areas, a high of over 120. Right now, we're pretty much at an equilibrium price
Right, over that whole long stretch.
of the whole long stretch. So, what I mean, if it got down, the key areas I'd be looking again. If we start dropping below about 45 again, I'd be looking to go along that ratio. If we get over that 100 level again, I'd be looking to go short the ratio.
Yeah. And again, if you guys were watching us back when it was 104, we all said the same thing on this show, is that now is the time you buy silver and sell gold, but we weren't selling any gold. So we all just bought silver.
No, my thought was that for it to come back into normalcy, gold was going to collapse. I never saw silver doing that.
Oh, see, I thought silver was going to scream.
And no, you talked about that at conferences. So
yeah. So, but then again, like I said, I got out of some of it, but I still probably had too much gold and silver going into this corrective volatile phase.
all right. So here's my last question, Mike. And you don't have to look at these on the same chart unless you want to. I have a theory on consumer discretionary, but right, so that's XLI, I think. But I'm sorry, consumers. Yeah, XLI is consumer discretionary, but
Okay,
XLP, consumer staples.
That's XLI industrial.
I'm sorry, XLY.
Right. Okay. I knew you were saying something wrong, but I couldn't figure out what. XLY. Right. Yeah.
But XLP, the chart looks better to me, and that's consumer staples. So take a look at the two and tell me if you like one better than the other, or you don't care about either.
I mean, let's just and you want XLP?
Yeah, I'm just looking at those two as proxies for discretionary versus staples.
That's XLP?
Yeah, that's XLP.
That's XLP.
That looks pretty good to me.
That's the monthly chart. It's breaking above major resistance.
Right.
So, I mean, that's really nice. XLY is, I mean, it's still above. I can't say it's breaking down yet, but if it starts breaking below 118, it could have been putting in a pretty decent topping area. It's really, we've got triple divergences down on the monthly. So I'd say about 116. If this starts breaking below 116, we could really be shifting away from consumer discretionary, at least in the short term.
Fair.
Okay. But you like the consumer staples you liked, right?
Yes.
Which is funny to me because I think that most people, the fact that the Russell's outperforming, most people say that it's a glimpse of an improving economy, like improving and broadening economy for those who were left out. And then this kind of contradicts that, Bobby, no?
Yeah, there's actually something I wanted to show you guys on this. And because obviously the government shutdown's over. You guys saw that, right?
Yeah, I saw that. Right.
All right. So the House passed it. It's going to Trump's desk. I don't know the details. I don't know if it's going to be a long term. I doubt it because they're just all idiots.
Yeah,
but
of course.
I saw something recently that I wanted to save for this show. And I'm going to put it up on the screen now, Mike, if you'll allow me. I'm going to share. I got to open it first. So we've talked a little bit about how ADP has become at least more reliable, right? Because it's not reliant on the government being open, right?
Yep.
So if I show you guys this, you guys see it?
I just see Mike Arnold.
Okay.
Okay.
All right. So this is, it's difficult for me to, did I just change it to something?
Yeah.
Yeah,
I
you
don't want to
changed
do
the
that.
chart.
I don't know how I did that. Let me try this again. This is basically, so a while ago, ADP started putting out weekly figures, right?
There
and
it
it
is.
started here like last November with this
by the
rally.
way, Bobby, you just said something. I just see these ADP weekly showing up on my Bloomberg terminal. That's something that's new, right? Is that what you just said?
It's
Okay,
new.
good. Because I didn't want to ask anyone because I didn't want to sound like an idiot. Okay,
No,
good.
so let me zoom in on this. So this is the last few weeks of the weekly one, right? So
Yep.
it started like, end of October. This is all the data so far. I clicked max when I took this screenshot. This is all the data for the weeklies. And you can see the down move here, right? And again, anything can basically be charted, right? Now, I
Yep.
don't have this in sort of an analytical form, but there's a trend there, right? I mean,
No
clearly
doubt.
see it on the weekly ADP numbers.
Yeah.
Now, the estimates for tomorrow's ADP number are higher, right? They're for 46,000 versus, I think, 41 last month. But I see this and I see the possibility of a disappointment. Do you guys, either one of you, and again, this is not a chart question, but do either one of you see that as, because I don't think Kevin Warsh would have been appointed by President Trump unless he was at least open minded to the idea of cutting rates. And I think the fiscal situation makes QE inevitable. It's like Q infinity right now until they get a hold of spending and all this. And then there was somebody, I don't remember who said it, but somebody out there said, what a great partnership between Warsh and Besant, which
That's
to
not
me
supposed to be.
blows the independence thing out of the water.
Nope. We don't
Right?
want a partnership. There's no partnership here.
Right.
Their
So,
jobs are separate, right?
right. They're supposed to be separate, but they said, oh, it's a great partnership for the economy. So do you guys think that it's going to matter going forward? Still don't think. I think we're still going to have a delayed non-farm payroll. And I don't think they've announced whether it's delayed or not. But should we be looking at this as maybe the market got it wrong when they initially sold gold, sold silver, rates have gone up? I mean, we're looking at the highest 10-year yield since about August of last year, early this morning. So what do you guys think of all that?
Well, you know that I think the gold and silver was just about stretch markets and not about Warsh. And I even
Agreed.
in the newsletter I said some things that kind of bolstered my argument. The fact that inflation expectations went higher, not lower after Warsh. That we started pricing
He
in
also
more,
talked
not
about how the
less.
announcement was way before
Yeah,
gold
the
actually sold off.
gold started selling off before,
Right.
way
The
before,
opposite
right?
of what I just said.
Yeah. So I think that Warsh is the most sensible candidate if people are thinking he's not as dovish as the others, but thinking he's still dovish, if that makes any sense. So, and again, of course he's going to be dovish. He's a Donald Trump appointee. There has to have been an agreement. Donald Trump just doesn't fly blind into these things. Mike, what do you think? Or do you have
So I
an
love
opinion?
when Mike does this. I talk about a fundamental story and he pulls up a chart. That's my freaking favorite thing. Go ahead,
I
Mike.
love that too. Yeah.
Well, how else am I supposed to make a decision?
No, this is the way you're supposed to do it.
Uh,
Yeah.
you mentioned yields on the 10-year. Let me get the weekly chart here. On the 10-year, we triggered an inverse head and shoulders back in December.
Yeah.
Uh, so and we've been climbing overall on yields since then. We're retesting. We actually retested the spike high from the 20th of January, which was 4.3. There's nothing yet to put a stop on this. To halt this pattern. There's still targets of about 4.34 and 4.40. The only thing we are in potential double top territory if we traded back below a yield price of 4.199, so 4.2 and close below that, I'd look for reassessment in the short-term basis. In the short term, we could pull back in yields closer to 4.1 again. Other than that, I'm long 10-year yields, and 30-year also on its inverse head and shoulders triggered in December. We've hit the first and second targets. We hit 4.94 as the second target. Now we've retreated a bit since then and rotated back up, but we still have a final target of 5. And that's just based off pure technical analysis, not going, the yields should gravitate towards 5, blah, blah, blah. So my thing is we're still in an uptrend on longer term yields based off the 10-year and the 30-year. And I gotta
Bobby, you know what my question is going to be? Where does the 10-year have to go before Warsh starts buying 10-year or even Powell?
We talked about this before. I think it's 440, and now I feel even more strongly about it given that chart.
Yeah, so I think it's like 465, but again, if I'm wrong to your side, in my opinion.
Yeah.
Yeah. So and all the talk about lowering mortgage rates, you know, because they're buying mortgage backs again. Bill Pulte was on TV this morning talking about how he thinks there should be 50 basis point cuts, whatever. He didn't mention the fact that I think the 10-year yield would scream higher if there was 250 basis points cuts, not lower, higher, because it
I
would
totally
be
agree.
viewed as being inflationary. Do you want to
And
cut it
then
off here?
mortgage rates are tied to what? Look at the 10-year.
Yeah, exactly. The 10-year will tell you, except for the fact that it is being obfuscated a little bit by Fed predictions of what they'll do with QE.
Right.
I think, but yeah, they're giving us a pretty good real time market view. You guys want to call it?
Can I just touch on a couple things I want people to look at?
Of course.
Broadcom.
Oh yeah.
Broadcom a couple weeks ago triggered a head and shoulders top, and it's been hanging out by that trigger area. So I'm paying very close attention to this because it's tied to the AI trade, which is getting very tired and long in the tooth. And we've triggered a massive double top pattern on something that went vertical for quite some time. NVIDIA, we have it's a bit sloppy, but we do have, it's not triggered yet, a potential upward sloping neckline head and shoulder top. So that's another one to keep an eye on. It's not, again, not triggered, but if this does trigger between that and Broadcom, we had Oracle, which went vertical for a while, which triggered the below 62.5 back in the middle of November. And now, and the thing I was watching for a reconnect with the weekly 200, we're getting a lot closer. The magnet price is 147.22, but the weekly 200 136. This has been a not direct AI trade, but it was with the, with the interwoven data center stuff and everything else. This is collapsing back down to a key magnet price. And then on top of it, like we started off the show, Microsoft, May this week, I'm watching real close, 409.85. A close below that, again, not in a straight line, but I'll be continuing to look for sell setups on any bounces. We are getting very oversold on a weekly basis. But if we close below 409.85, that triggers the probabilities that we could retest the 200 week back down around 375. So I'd be looking on bounces to set up maybe some put plays and everything else. So that's another one that's broken down. Adobe, if you haven't looked at this one, trading against the key 62.5 and a very key support level from September of 22 and from the March 20 COVID low spike, trading back down there if you don't follow Adobe. At some point, these will be some really good longer term buys, especially I'm really watching Adobe.
Yeah,
However,
no doubt. Yeah.
However, some of these things, this is why you're starting to see under the surface some key things breaking down that could be NASDAQ related. CRM, Salesforce. This was turned into a darling again. Last week closed below 62.5, below its 200 week. A couple weeks before that, we could see CRM back down around the 160 mark in the next few months.
Can we look at one more then after this too? Avnet.
Which one?
Avnet. By the way, you people are watching, if you know me or my family, you know that I'm highly, highly connected to the Avnet company. I'm not recommending anything. I'm doing this for my friend, the CEO, and my relative who is an administrator there. But anyway, go on. Yeah.
Avnet, that's probably something I'd take my whole life savings and short at this point.
No, that's not true.
That was a joke, people.
Yeah.
Again, Avnet's, I have no connection to this. I have actually never looked at this stock.
Yeah.
Right now it broke out last month. January's last month at this point. It broke out above key resistance.
That's why they sent me a message wanting to know why it rallied 14% in a day, because there wasn't really much news. And I mentioned that technical consolidation pattern that it broke out of, and then boom, it followed through very, very quickly. That's pretty much it, right?
Yeah, it was, I mean, I don't know anything if there's fundamentally related to. I'd have to take your
Well,
word.
based on the
But this
people
is
who I was
pure-
talking to, I'd have to take their word.
Well,
Yes.
from pure technicals, we had major resistance 57, and it broke through that. Now, would I be surprised if it pulled back to test the 57 area? No, I would not.
In some ways, you almost want it to, correct?
Yes.
Yeah.
I love, one of my favorite patterns, period, is when things break above key resistance and pull back and then form a buy setup at or near that resistance with a rising rotation zone on a daily basis. You see the rotation zone's going to be rising that area. So on any pullback, those are the kind of things I love, because then you're confirming that prior resistance has turned
Matters.
into support,
Yeah.
and they're relatively low risk buy setups when they occur there.
Okay.
And actually, look at one more thing. On January 20th and 21st, to go back to the old thing we were talking about, you had a percent B buy with a close just above the 200.
Yeah, you had right
yeah,
here
that juiced it a little bit too.
was a
Good call
percent
there,
beat
Bob. I
buy
didn't
on
even
a
see it.
weekly basis. Okay, if you do want to take something away from this wonderful show where we give away tons of information, learn percent B buys.
Yeah.
The other thing, you know what? Here, Jim, you put all your money into SanDisk. At this point, again, a joke. Here's your monthly.
Good luck with that, people. You
I
should
don't know how
jump in
anyone
on
buys
that.
People will say all the time, "Should I buy some of that?" God, no.
No, I'm not.
Considering I don't even have a PDE ratio.
Yeah.
And we've gone from 40 to 700 in the matter of what? 1, 2, 3, 4, 5, 6 months.
Yeah. Means you missed it, people.
Might be a tad overextended at this point. This is casino money. If you want to do it, don't count on getting any of it back.
Amen. Yeah. All right, let's wrap it up. By the way, the people who are watching, if you like this and you want more actionable ideas on a host of different names, please go to unfilteredinvestor.com. The success rate that Mike and Bobby have is really amazing to me. It's, in the mid 70s as far as success rate goes in the trade, since we've been doing this for about a year. So if you are interested in that, please go. Bobby, are we giving any free months yet or anything like that?
I will have news on that soon.
He will have news on this. And he hates, by the way, when I pressure him like that on air live, but I do sometimes anyway. But please go to unfilteredinvestor.com. Check it out. I'm amazed by it all the time. Our other sponsor, Independence Art. Get grass-fed, grass-finished beef from Marco and own gold and silver, man. Things can get a little scary. We've been through scary shit.
Real quick,
What's that?
with Dana Samuelson at American Gold Exchange. You could sell it to him as well.
What's that?
Dana Samuelson.
Yeah, you can buy and sell from him.
You can sell it to him. It was a super, super easy process to get that started. Insured, the whole 9 yards. He pays the shipping. It's a great deal.
Do you know what he was paying over spot? Because it's over spot,
No, I didn't
right?
get that far, because he basically gives you a quote and then you're locked in at that quote.
Okay.
Which I didn't get to that point because I didn't sell it.
Again, and you guys, if anyone who is watching who hasn't dealt in physical gold and silver, both of them are trading at a premium right now. I don't know. I mean, I've heard some stories that silver isn't, but gold's trading at a premium. You shouldn't be selling it for lower than spot at this point in time. And I'm sure Dana will give you a great price. Okay, that's it. Futures Edge. I'm Jim Iuorio. That's Bob Iaccino. Thank you, Mike Arnold. It is always a wealth of knowledge. I've written a whole page of notes on things you're the only guest who actually write notes when you say stuff, and I appreciate that very much. Thank you guys for joining us. You are the best. This has been the Futures Edge.
Thank you for having me.